Here's why having a daily bias sucks. Now, don't get me wrong, it can be useful, but only if you really know how to use it. And yes, I get that having a bias, it gives you direction and purpose to your analysis. It helps to focus your attention on high probability trades. It also helps avoiding getting chopped about trying to play both sides in a single range, or it also helps filter setups that align with structure, trend, and other confluences you may have. But a fixed bias can also be dangerous if it blinds you. If you get too attached to your bias, you start forcing trades to fit your narrative. You also ignore what the market is actually telling you, because as we know, we can have our POIs, we can have our structure marked up, and yes, it will play out 90% of the time, but the market is sporadic. You don't know what's going to happen next as much as you really think you are, or think there is, or think you know what's going to happen next. But the reality is we don't need to know what happens next in order to make money, because I'm a reactionary based trader, right? Now, another one is that you hesitate or miss good trades going the other way if you have a fixed bias, right? So what is actually better? Now look, everyone's going to have their own opinion. It's very subjective, but I'm telling you now, the best traders out there that I know and myself, whether they're trading the same way or a similar way to me, or like supply and demand trading, or even an ICT trader, etc. The top traders are the traders, or if they're just volume based traders, order flow, you get the idea, right? And the best traders out there, they have it like this. They have a conditional bias and reaction based execution. So an example of this is, if price breaks above X level, I'll look to go long, and if price breaks below Y level, I will look to go short. That seems simple, and it actually is. And that's the way we try and keep our trading. So, like I said, what's better? For my opinion, conditional bias and reaction-based execution. And this will give you a framework, okay? It gives you flexibility, and it also gives you better decision making once you truly master it, okay? Because you develop a very unique edge. Now also, you're not married to one direction. You're planning both scenarios in advance, okay? So, for me, don't be bias less, that's just aimless, right? Don't be bias obsessed, that's reckless. Be bias aware, but react to price with a plan on both sides. So what do I mean by this? Well, let's just take a little look, wherever the chart is, there we go, it's here. Let's just take a look at my markup for right now, okay? So I'm on a chart here, right? And I can see on this H4 structure that straight away we have a H4 range high and low. And on the weekly and daily time frame, we are bullish. We are pretty overextended. And yes, we may see a pullback. And that was around the time of here when I was saying that. I was saying we're going to see a pullback potentially into this area. Now, again, like I said, we don't know what's going to happen next. We can only trade in probabilities and anticipate certain price movements, right? I get that, okay? And, don't get me wrong, the POIs I send out to my team on a daily basis and the setups I discuss, 90% of them or 95% of them do actually hold and play out, okay? And anyways, at this point, right, I was expecting price to pull back, and it did, okay? Now, during this move here, I was also thinking, well, price is obviously bullish. Yes, we're overextended, so we could go short, but price is bullish, so we could also look to long. So when I jumped onto the 15-minute time frame, right, which was around this time here, obviously this was Asia, so coming into today's session, I was looking at it like this. Well, let's just mark up structure. Okay, we had a previous bullish move to the upside, but obviously we shifted bearish to the downside here. We also had this internal shift to upside there, shift. Right, we're breaking bullish, okay? Now, let me look at this a bit more in detail. We have some liquidity. It was swept during Asia, and as you can see, we had a shift to the downside. We then pulled back, we filled this imbalance, and obviously tapped into my area of interest, okay? From that point onwards, we took out this low, we formed a new range low, we formed a new range high, and with this bit of price action here within this candle, within this M15 range, was just obviously a lower time frame pullback and a continuation, okay? So when we jump on to the 1 minute time frame, this is around 7:15. When we jump on to the 1 minute time frame, which would have been around this time here, as you can see, this was just simply a refined version of what you see in the M15, okay? So straight away we had an M1 supply chain, okay? Price had obviously mitigated this area, just kept mitigating the area, This, what you see here, a bunch of cluster mitigations together, is what I refer to as a supply chain, okay? So going short from here, because again, you got the range low here, you got the range high here. If price was to break above these highs here, and obviously take out the M15, I would look to short. Go long, sorry. But obviously because price is staying below this low, I was looking for shorts. And that's exactly how you can get on this short move here and here. Okay, but that's just a little bit of a trade recap. I'm getting a little bit ahead of myself. But when I jump back onto the F15 and just think about what I said there, right? We had this bearish range low and this bearish range high. Yes, the H4 is bullish, so a lot of people having that bias in mind will ignore all of this move and only look for price to pull all the way back into their high time frame POI, in which they would look for to see how price reacted from. And if it, let's say it did react from, let's say this area here, we had seen a bullish shift to the upside, then wait for a pullback and go long. Okay, that's fair enough. You can keep doing that, but you're going to miss out on a lot of these short-term moves here, right? For me at the time, like I said, if the 15-minute started breaking bullish and we got a 1-minute reaction off a newly formed M15 demand zone, which I'd refer to as, then yeah, we can go along with anticipation that we're going to respect the H4 current bullish external range, right? Vice versa, because I was expecting the pullback if the M15 has stayed bearish and I was looking for shorts, then I would have completely disregarded, well, let's just say I had fixated on that bias, I would have completely disregarded that short move. But because I had a neutral bias and obviously have a conditional bias and reaction-based execution, I therefore was saying, okay, if price stays below this range low during this pre-London Open, Frankfurt Open, I'm going to keep looking for shorts all day long, okay? But the minute that the 15-minute starts to shift bullish, right, we're still yet to shift bullish, by the way, but the 15-minute, when it starts to shift bullish, then I may look for longs. So pretty much, if I just put the replay mode to here, right, and this is the current price action, and let me actually mark up the charts for you guys, you can actually see a little bit more visually better that what I am looking at, right? So 15 minutes shift to the downside there, we had a 15-minute breaker structure as well. And as you can see, this is my, now don't get me wrong guys, the way I map up highs and lows is very, very different to how you probably watching this video map up your highs and lows. I have a very rule-based system in terms of that I follow in terms of to map up my structure range highs and lows. Now, I have done a structural market structure video masterclass on my YouTube somewhere, so you can go ahead and find that out. But I just do it completely different. You know, don't get me wrong, I've studied all these other people out there that you probably studied. You know, I've studied ICT, not necessarily directly from him. I've studied, you know, the SMC people. I've studied supply and demand people, the Wyckoff. I've studied pretty much everything that you guys have discovered and also learned yourself. I discovered how to mark up the highest high before the break and the lowest low before the... I get it, right? But I trade differently because I've simplified my process with a very rule-based system. So everything that I do, from marking up liquidity to marking up the structure to marking up POIs, there's reasoning behind it. It's not just random or not just sporadic, okay? Entries too. Now, anyways, going back to this and not kind of go off topic here. At the time, the range low hasn't really been formed. Yes, we can anticipate this to be our low, and yes, this is our valid high because obviously the high has been formed, right? That's within my rules. So, coming on the charts, let's say 6:45, whatever the current time is there, right? I was saying, okay, yes, the weekly daily 4 hours bullish. So, yeah, don't get me wrong, the high probably set maybe if the 50 minutes in alignment. But you can also look at this from a second perspective and think, well, the 4 hours kind of overextended. The daily and daily and weekly, is definitely overextended. We're going to be due a pullback at some point, right? So my thought process coming onto the charts at this time was to say, okay, if price breaks above this high here and we get a strong candle closure above, then we enter into, let's say this is the new low, or let's say this is the new low in the bullish range and this is the high because obviously price starts to pull back and we're now inside the bullish range. I would obviously look to trade from a newly formed POI or whether it's this candle here, the breaker, and look to long, right, assuming that the M1 reacted. Don't get me wrong, it's not always going to play out. Nothing's 100% in trading. You need to disregard that mindset, okay? Nothing is 100% in trading. There's no holy grail. There's no best system out there. Okay, what works for you works for you. It's as simple as that. Okay, but at the time, like I said, if price was to break above this level, I would look for buys. Why? Because that's my X level. Okay, look for buys. It doesn't have to be Y or X. It's just what I'm saying. At the time, I say, well, if price breaks above this high, look for longs. But if price reacts from here, I'm going to look for shorts. Simple as that. That's as simple as I keep it. And it may seem simple looking at this now and listening to me explain it. And when you come and look into the market yourself based on this one video alone, it may be a little bit more difficult. But that's the way I like to keep the charts, in terms of if price breaks this level, I would look to long. If price breaks this level, I would look to short. Don't get me wrong, you can have a daily bias, but you're probably a struggling trader already. and you're getting fed this information on having a daily bias. Like I said, a lot of it's subjectionary. You know, people have their own opinions and they're entitled to, but the best traders out there that I know, especially, and myself included, being a good trader, I'd consider myself a top trader. I put myself in that bracket, definitely. You know, I'm not here to flex a lifestyle. You go on my Instagram, I'm not showing you like the Ferraris and the Lambos. You know, I don't care about all that. I'm just showing you trading advice. And I've been doing this since 2018, 2019. I make barely anything from my mentorship. I'm not here to try and become a £1 million course seller. I'm here to become, a £1 million trader. I don't know if that makes sense. It probably sounded cooler in my head, but you get the idea. Okay, it's easy for me to say that. I get that, right? But I won't mention anyone specifically. You look at the other traders out there that are making so-called a lot of money. They have other businesses. They're selling clothes, right? They're just acting goofy on the internet, right? I think I might start acting goofy. I don't know. But yeah, that's how I kind of approach it in terms of daily biases. You know, just keep it simple, guys. You don't need to have a daily bias because you'll sometimes miss out on a lot of moves. If it's working for you and you are profitable and you're making consistent payouts from prop firms and withdrawals from your own personal capital, bravo, good on you. But if you are, you probably ain't watching this video. So yeah, just keep that in mind. Give it a little test, see what you think. But that's kind of the way I like to approach the markets. It's the same on this day, you know. Coming back on yesterday, this is still the H4 range high. Still the same H4 range before obviously the new high was created. But remember that I believe anyway, this is a wick sweep on H4. But as you can see here, right, at the current time of obviously price action within this bit of time period here, right, we had this, let's just keep following price up. We have the range high here. We follow price back. We have the range low. Price shifted bearish. Okay, we pull back, respected this area of supply. And what did the price do? We just continued bearish. We took out this low here. Okay. Now at the time, we had this new range low, we had this new range high. As long as price was staying below this low and reacted and gave us a 1 minute entry, then we can keep looking for shorts. But because price broke obviously bullish, we can look for longs from this point onwards. Now in terms of obviously the rest of that longer session, it wasn't the most cleanest. Okay, there wasn't really much pullbacks in terms of entries. There's a little entry here to go long on the 1 minute time frame that I won't discuss, but there was a nice little long opportunity there. But you know, that's just based on structure. When you look at, you know, POI mitigations, etc., you can clearly see that it tapped into something worthwhile for this, you know, move to go bullish. So we're waiting for that, you know, break up here, then looking at the M1 from here, perfectly fine. So yeah, that's pretty much it in terms of what I wanted to discuss from a daily bias. Like I said, don't be biasless, that's aimless. Don't be bias obsessed, that's reckless. But be bias aware. React to price with a plan on both sides. Okay, it won't, if it's not clear, if you can't describe, or sorry, not describe, if you can't explain the setup, then it's not worth your capital to risk. But yeah, this is just a little video that I wanted to do. Nothing against anyone having a daily bias, but more so be open, be aware to having plan on both sides of the market. If price breaks X level and if price breaks Y level, because you probably miss out on a lot of moves. And if you can learn to filter these moves out and focus on just higher probability executions, like I said in previous videos, your edge is your personal feeling when it comes to executing a trade. But yeah, that's just my opinion, guys. Like this video if you want to see more, and I'll catch you in the next one. I probably will do some more examples, maybe a part 2 to this, or maybe like an updated video in the future. But that's kind of how I approach the markets, guys. Take care.